In May, I made a video entitled Silver at $21 Coming Soon, at a time when silver was trading at $26 an ounce. At a time when all the talk was, $600 silver in a couple of months. I believe that silver had to go to $21 before it could go to $30. And here we are today at $21. What's going on? In that video, I made this price prediction. We may see $21 silver sometime this year. Here we are in October, and as of the time of recording this video, silver just bounced off $21 an ounce. How could I have been so right when so many got this wrong? Yesterday there was a video on social media talking about silver at something like $5,000. It got a lot of views, which is part of the problem. Hype is what sells on social media. The algorithms favor creating buzz and generating excitement, while what's real, what is the truth, gets obscured because, let's face it, keeping it real is boring. The truth is not difficult to understand, and it's usually simple. Here's what I said back in May. We're not likely to see silver get above $30 until we start to come out of the recession. We can't come out of the recession until we first go into it, which I believe we're starting to do now. The Fed's in the driver's seat. Their actions in raising interest rates and the follow-on effects are driving market sentiment, and sentiment drives silver and gold prices. One of those follow-on effects is the US dollar has been getting stronger against other currencies, and since silver and gold are priced in dollars, there's downward pressure on those prices. The dollar has been getting strong in the last few weeks for a number of reasons, including the aforementioned rising US interest rates. This has made US assets more attractive to investors, as they now offer higher yields. If you could earn zero risk 5.5% on your money by buying US Treasuries, why wouldn't you take that? We haven't seen yields like this in more than a decade. Just go buy some T-bills, sit on the beach, and clip coupons. Sounds like a good life to me. There's also safe haven demand. The dollar is often seen as a safe haven currency, meaning that investors flock to it in times of uncertainty. The current economic and geopolitical environment is very uncertain, with the war in Ukraine, rising inflation, and concerns about a global recession. This has led to increased demand for the dollar. T-bills are where most of my cash is now. I haven't bought silver for a couple of months. Only just recently, down at these lower prices, have I started buying again. It's a good time to accumulate while dollar cost averaging. There's some great deals out there. American Silver Eagles for less than $26, Maple Leafs for $24, Asahi Rounds for $1.10 over spot. But that yield on treasuries is just too attractive to ignore, which is why you see a lot of money rotating over to there, while at the same time less interest in precious metals. Yields could go higher, and silver prices could have further to fall. It looks like interest rates are going to stay higher for longer, maybe well into 2024. It's a presidential election cycle, so expect all sorts of shenanigans which could further pervert markets. For those reasons, I'm not backing up the truck just yet. Now, let's visit the future. I believe silver will reach a sustained $50 an ounce around the time I'm looking to sell. That's my new price prediction. I can't offer any better than that. It could go a little lower in the short term, or it could go a little higher. Check out this article from Kitco. Gold bulls can look forward to a bright future despite headwinds. These comments are taken from an analyst at REDUX, where they say basically the same thing I just said. Gold price tends to rise following the first cut of U.S. interest rate cycles. On average, since 1984, one calendar year after the Federal Reserve first cuts its rate after a hiking cycle, gold is 10% higher than the day of the decision to reduce interest rates, and after 2 years is 18% higher. The dollar tends to weaken, yields on U.S. Treasuries fall, and the economy tends to have deteriorated. All of those elements can act as a tailwind for the gold price. In summary, the Fed is driving rates higher and interest in precious metals lower. This is not financial advice, but rather only what I'm doing, which is nibbling a little on these lower silver prices and premiums, only buying the very best deals out there while stuffing my war chest with T-bills. That's all for now. Thanks for watching, and be sure to stick around for my next few videos where I share research on the recent crash in gold and silver sales. Notice I didn't say prices, but sales. That's right, I have sales volume data which is not available anywhere else. So be sure to subscribe and hit that notification bell so you don't miss an episode.